All right, so here we go. Another amazing show for you guys today. We're focusing on the DOT and Kusama ecosystems today. Super special guest, one of my favorites, two of my favorites. We've got Kevin and Patrick. So my name's Kevin Bradford as well. We've got two Kevins on here, the Swiss dude and myself. So a double Kevin show. So let's get straight into it. I'll just do a quick introduction on myself. My name is Kevin, as I said. I'm like founder of the Yield Labs. I've been in crypto since 2017, and we're basically focused on this Yield Labs project at the moment, trying to bring some of the best and most professional kind of content to you guys to make better investment decisions and kind of increase your personal wealth. So yeah, this is awesome ecosystem overview today. Patrick, do you want to just give a little introduction on yourself?
Yeah, absolutely. So
Thanks.
name's Patrick. So tag. I go by Patrick or Wave, and I met a lot of great people during the depths of the bear market around 2018, 2019. So I met Kevin actually through podcasts, through a community member in Moon Gang, Dollar Cost Crypto. So over time, we had a chance to build up a community through the podcast to start, and then Kevin was really a very big part of the community building that took place in Celsius, organizing weekly community calls and just keeping very in close touch as far as the state of the business and any opportunities within Celsius. So from the get-go, there was a lot of great people I met through Celsius. Obviously, still very good friends with Kevin and very closely following the work that he's doing on Yield Labs, because there's a very smart community, very great panel, and just highly respected individuals within this community.
Yeah, that was good times, right? We had a lot of fun, and the work kind of goes on. Let's expand the work, not just one project. Let's include that project and just keep adding to it. Basically, there's so much cool stuff, and we're going to explore these other ecosystems. So, Kevin, do you want to introduce yourself to the audience?
Yes. So I'm the second Kevin of the crew, co-founder of Yield Labs, so helping Kevin, the other Kevin, drive this community and also monetize the entire project, so we can keep pushing much further. And I actually met these two fellas here through podcast, but not as a participant, more as a listener. Last year on the Dollar Cost Crypto podcast, actually, where they were talking mostly about Celsius, Bitcoin, and Ethereum, and we'll get back to this very shortly. So I'm super pumped to start a small series of video about the Polkadot and Kusama ecosystems. So we'll have to do this in a few different times, because otherwise it's going to be too long. So today we're going to focus on Kusama, not even the ecosystem, but the project itself and its token. And so, yeah, maybe to start, let's go straight into this. So last year I was listening to you guys talking about Celsius mostly, and Patrick, you were mentioning the fact that there was, it was like 2020, so we were just after the COVID crash, and this huge crash in all the markets, but especially in the crypto market, that just destroyed everyone. And we didn't really know what would get out of that. I think Bitcoin was about around 8 or 9K maybe in the summer, so we're not really sure like what would happen afterwards. And so you were basically mentioning that the only 3 projects that really made sense and the only 3 tokens to hold that would not be pure speculation would be Bitcoin, ETH, and Cell. And so today we're talking about Kusama, and later on we'll be talking about Polkadot. And what you told me before is that you got into this ecosystem around October, which is the kind of same moment as I got into it. So I really wanted to understand what made you interested and even move into this ecosystem and invest into this ecosystem. And basically, if we would just focus around Kusama today, what made you interested in Kusama, and what does it exist? What does it matter?
Sure. Yeah, that's a great question. So in terms of, let's say, Bitcoin, Ethereum, Cell, when I mentioned, let's say, just those 3 coins, my frame of reference at the time was just based off the previous market cycle, and I think what we've seen this market mature massively, even during the course of this recent or even ongoing bull market that's taking place now. So I would say over time, there's more inputs that you get that adjust your worldview, and I think that's part of basically growing and acknowledging new things can come because it's all about opportunity. But in the case of, let's say, Kusama, what definitely struck me for the project and the ecosystem was the fact that it was led and bootstrapped by Gavin Wood, who is one of the co-founders for Ethereum. And Gavin has a very engineering mindset, and I had a chance to look into some of the early videos and then early development that was taking place on Polkadot and Kusama. And to me, the implementation or the idea behind it made a lot of sense with solving the composability issue that we see even on Ethereum today. And all that, what that really means is on Ethereum, when it gets very congested, it's very difficult to move value around because it's all stored on that same layer. And the ecosystem around Polkadot and Kusama optimizes, let's say, around business use cases that don't have those same types of constraints that we see on Ethereum today with the exorbitant gas fees.
Okay, great. Okay, so can you go a bit deeper into the origins of the project?
Sure.
Why concretely Gavin decided to leave Ethereum Foundation and go start this? And maybe can you also explain a bit more what Gavin was doing for Ethereum, because he had a pretty important role.
Absolutely, yes. Gavin did have a extremely important role with Ethereum. He's actually the reason why developers create dApps on Solidity today. So Ethereum is the one that, or I'm sorry, Gavin is the one that was, he was the force that created that entire engine around Solidity, and it's sometimes referred to as Ethereum virtual machine. So at the time when Solidity and EVM was implemented, Gavin and a few other developers did it over a very short time period. It was maybe over a 2-week time span, and it became a very incredible tool that we see in the market today. So from that, just understanding that and understanding he was really the main creator behind the Ethereum virtual machine, that already was very intriguing for me as far as following any future projects or developments. And in this case, it was the Polkadot and Kusama ecosystem. So the reason why Gavin shifted over to Polkadot and Kusama is I think a lot of it when the ETH Foundation was in its very early stages, there was a clash of different views as to what would be the optimal way to pursue, let's say, Ethereum 2. So there was conflicting viewpoints between Vitalik Buterin, Charles Hoskinson, who was another co-founder, and Gavin Wood. So those three conflicting viewpoints as to what made sense to progress further ultimately ended up fracturing that original set of co-founders, and was one of the reasons why Gavin Wood pursued ventures within Polkadot and Kusama. But the other aspect we have to keep in mind is during the entire development of the DOTSAMA ecosystem, it's not being developed to replace Ethereum or Ethereum 2. It's developed to basically work in parallel and provide a use case in the market, specifically with interoperability. So that's what led to the initial, let's say, fracturing of the ETH Foundation, and then Kusama and Polkadot ended up blossoming under Gavin Wood, who then attracted a lot of core developers that then created the protocol that we see today.
Okay, so can you just explain what Solidity is, maybe for the people who are not very technical here?
Sure.
And
yeah, sure. So Solidity is just the programming language that developers use for Ethereum. So for example, anytime a smart contract is deployed onto Ethereum, it uses it uses what's referred to as Solidity. So that the implementation of Solidity again was created by Gavin Wood and a few other developers at the time in the Ethereum Foundation. So Solidity, you could just think of it as the engine of Ethereum. Like EVM is the engine, and Solidity is what essentially creates that entire engine.
Okay, so in other words, it's the programming language that the computer scientists today at school should learn instead of the classic JavaScript and so on, if they want to have an incredible future.
It is, yeah.
It is actually it is.
Yeah, it absolutely is. You make actually a very good point there, because in terms of the programming languages we see in the market, like Solidity, Rust is another one I know is starting to gain traction, and then something like Python, which you can develop all sorts of tools using Python. But I agree with what you're saying. Solidity is an extremely useful skill set, even if somebody learns it on their free time while they're going to school, because it is going to be more useful than most of the courses or programming languages they see in college.
Yeah, I just read the other day that if you want to become a millionaire overnight, you just need to learn Solidity, and then you go work for one of these projects, because they're just a massive shortage of engineers who know how to use this language. And from what I mean, I'm not a very technical person, but from what I understood, this language is actually not that difficult to learn compared to other classic programming languages.
Yeah,
which is making it really strong, because people from different backgrounds. I think the guys from even the guys from Aave, they're actually lawyers initially. I mean, they're pretty technical lawyers, but they're lawyers, and so you can have all these different people with different skill set who learn that stuff and build. Okay, so let's get back with so if you had to define what Kusama specifically is in a few sentences, what would you say?
Yeah, so Kusama, so the name itself just refers to the ecosystem. So in terms of, let's say, Kusama or Polkadot, to keep it, let's say, something that's easy to visualize, you could think of Kusama, and I just want to make this very, very easy again for somebody to visualize. Just think of a very nice car that represents, let's say, the entire ecosystem. Let's just call that Kusama. And then what powers Kusama is the engine referred to as Substrate. So Substrate is the engine, let's say, in the Kusama ecosystem. And then in Ethereum, Solidity and EVM is the engine in that ecosystem. So two different implementations, but two different engines two different implementations and two different engines that are driving each of those different ecosystems.
Okay, great. So now that we kind of understand what Kusama is, where does it fit into all these layer ones, basically? Because we have all, especially, I mean, most people are there to invest, let's say, or to kind of speculate on what, but the problem is there's so many different projects, and then you can start to categorize them, and you have these so-called layer ones that started with Ethereum, but then you have Solana, Terra, then you have Polkadot, Kusama, etc., Cosmos. So basically, where does it fit? And that's, I think, is going to this answer will really help people understand that it's not a competitor, but is, as you said before, working in parallel.
Yes, that's a very good question. So in terms of, let's say, the layer ones, as of today, that landscape primarily looks like, so you have Ethereum, Binance Smart Chain, Solana, and Cardano as, let's say, the layer one ecosystem. And then if we, let's say, go to layer 0, so even though Cosmos isn't technically dubbed as like a layer 0, there's a lot of similarities with, let's say, Cosmos and DOTSAMA. So I just think of, let's say, you have the layer 1 ecosystems and then the multi-chain ecosystems. So in the case for multi-chain, the two verticals that exist there are Cosmos, and then, of course, what we're covering on this stream, that being Polkadot and Kusama, and how and the whole intention of the multi-chain ecosystem is to take, let's say, load off of Ethereum and help it scale. So the issues we see with Ethereum today is when a developer deploys a dApp, they're all competing for the same space on that same layer one. Or in the case for multi-chain, you have dApps that are they can operate completely independent of each other. That allows for, let's say, a lot of activity to be kind of focused on a specific dApp versus one dApp on Ethereum hoarding all the resources that exist. So the biggest thing I would say it's more of a resource optimization. So in Ethereum, there's not really any resource optimization around dApps. They all happen on that same what's referred to as the layer one. And then in the case for layer zero, you can have these totally independent networks that have, let's say, their own activity, but they're not affected by any load that exists to like an adjacent network that's within that entire ecosystem.
All right. And so if we're not going to talk too much about Polkadot today, but if we understand this, how does Kusama relate to Polkadot in
Sure. Yeah, that's a really good question as well, because there's a lot of misconceptions when it comes to Kusama and why it even exists in the market. So in traditional, let's say, layer one systems, or really any blockchain based projects, you have what are referred to as like test nets. And so you have, let's say, a test net where you have all these changes get implemented and battle tested, and then eventually those roll onto like a mainnet. So the issue with that is the moment those changes roll onto, let's say, a mainnet, you just lose the whole purpose and utility of, let's say, that test net. So when you go over to, let's say, the Polkadot and Kusama ecosystem, so just to be very clear, Kusama is not a test net. It is absolutely 100% not a test net, even though people tend to call it it is not a test net. Kusama, I would refer to it as a live sandbox where you have this protocol that's live. It's in the market. There's actually value moving around on it. And it's a place for developers to battle test in a live sandbox before rolling upgrades into the final products in one level, let's say, higher within Polkadot, even though I know we're not specifically talking Polkadot. It's a place for developers to experiment, try to break things, and have an actual environment that has value on it, because value is what drives demand. And it allows for developers to create all sorts of unique incentives that you don't have access to on a test net. And that's why a test net and Kusama are two totally different things. Kusama is actually a live network with value, with incentives that you can't have on a test net.
Yeah, okay. And maybe as a little precision, I mean, because even after this kind of explanation, people might still think like, but why does Kusama exist if it's not really a test net, but there is Polkadot, which is like this bigger Kusa and like this bigger thing? And isn't it also because it's much cheaper actually for most of the project to build on there and to stay on there and to live on there, where Polkadot will be like only for the huge ones, and a lot of the project will want to use this technology, but will not be able to just pay for it because it's just too expensive to build on Polkadot. I mean, that might be a bit simplistic, but like, is it?
Yeah.
Does this make sense?
Oh yeah, definitely. So the way you described it is very much in line with the intentions of Kusama as a network. So you're absolutely right. The capital requirements for to build on Kusama is lower for let's say a project that's looking to build a new project on the network, and that goes into the whole thing with Parachains, which we don't have to necessarily go into. But the capital requirements to secure one of those Parachains is far lower in Kusama as opposed to Polkadot. So it's a faster and an easier access environment for developers to attempt to deploy a product onto. So there's and I think a lot of that too. There's a lot of use cases that exist in the market that just need to get to market very quickly and have some sort of baseline functional product working for their users. And Kusama is a great place for those types of developments. Whereas Polkadot is more for applications that need a more they need a more stable, secure system. And those use cases would be more applicable to Polkadot. And security does have a lot of value. So those use cases that just need a more stable, secure environment would be deployed on Polkadot. But for many projects, and there's already a ton of them in the market today, that just need a fast sandbox to deploy onto, Kusama is a very good place for that.
Okay, so I think we still talk about the parachains, but not after, not this question, the following one, because it's going to be a good introduction to the value accrual and to the actual discussion around the token. So before we move into that, the next question is basically why would any developer decide to go build on Kusama today when you can go build on Ethereum that has massive network effect, or you can go build on, on Terra, or that has an incredible user experience, or, why would someone, how is the Kusama ecosystem incentivizing developers to come on there? Or like, why would I, as a developer, that I'm not, by the way, but why would I go and spend my time and resource and energy there in this kind of, like a bit mystical Kusama and Polkadot world that we don't really know what they're doing?
Sure. So in the case for let's say even back to the question on Ethereum. So for developers to even deploy on Ethereum today, it is actually fairly expensive to even deploy smart contracts, because the gas fee congestion is absolutely nuts that we've seen through this entire cycle. So there is kind of a misconception when it comes to the cost of deployment, because it varies depending on whether let's say there's a new project that's looking to launch a product, and that requires bonding a lot of KSM to secure what's referred to as a parachain slot. But in the case for, let's say, a developer that's looking to deploy on some sort of EVM, those tools already exist on Kusama today through products like Shiden and Moonriver that are based off Ethereum virtual machines. So whatever tools you can deploy on Ethereum, you can deploy those same tools on Polkadot and Kusama. And because there's way more leeway in terms of the scaling aspect of it. So there's a lot of room for developers to deploy inexpensive smart contracts or other utilities in these EVMs that already exist within the network. Whereas on Ethereum, those deployment costs are so high today. Even with NFTs, like to deploy NFTs, depending on the congestion, I mean, it can cost developers thousands of dollars to deploy on the network. So the tools that I would say really the EVM, which is the most commonly used tool in the market today, it's far cheaper to deploy in these multi-chain systems, because it just doesn't have those issues that layer one Ethereum has when it comes to the block in terms of the congestion.
So can you go a bit deeper into the trade-offs I'm making as a developer if I decide to build on Kusama today versus Ethereum? So you said, okay, it's cheaper, for example, but am I taking the risk that Kusama will never be used in the future? Or is there a moment where whether I built on Kusama or Ethereum, it doesn't matter, because this stuff will be basically working together and people won't even see where it's built on? Or, today, if I need to decide as a developer where to build, like, again, the Aave guys, the synthetics guys, they just say everything's going to end up on Ethereum, even if it's more expensive, it's going to end up scaling. All the network effects are there, all the users, etc., which makes a lot of sense. So what are the concrete, 3, 4, 5 things that I'm trading off if I go build on Kusama today?
Sure. Yeah. So this is actually a very good question, because developers themselves. So there's also going to be speculation to some extent for developers that are coming into the market. So for one, like Ethereum, for example, the cost to deploy is significantly higher. So that's already a higher barrier to entry. And then the other consideration is we've already seen in this market the whole Ethereum narrative disrupted multiple times. So Binance Smart Chain, for example, disrupted Ethereum. I know Ethereum holders may deny it, but they disrupted Ethereum briefly during the market cycle. There was a lot of activity, a lot of value being locked on Binance Smart Chain. And we also see that, as you mentioned earlier in the stream, within Terra, within that whole Cosmos ecosystem. So to me, there's already proof in the market that shows developers are very much willing to build on these other networks. And the idea that everything is going to exist, at least on Ethereum, I would say even for this cycle we've seen so far has already been proven not to be true, based off again Binance Smart Chain, Cosmos, Terra. So there's already that disruption that's taking place. So I would say, with regards back to even synthetics and what they may have suggested for Ethereum, I would say the big question that developers have today that there's not necessarily a concrete answer for is whether these other networks that are currently grabbing that market share can build up a large network effect to work alongside Ethereum after Ethereum 2 hits, let's say, some form of scaling later on. And we've already seen, specifically with the development around Polkadot and Kusama, how long it takes to build a new network up, because Ethereum 2 is not the same network. There's a lot of development challenges they have to go to. Even just staking itself is not Ethereum 2. That's still long ways out from the scaling aspects of it. So there's already, and yeah, as Chester mentioned, there's already bridges being built from Ethereum, and even Polygon is another example of that. There was a huge blow off that went onto Polygon, and that was even on a network that had admin keys. There's literally just a few people controlling the multi-sig, but yet it's a multi-billion-dollar network. So it's to the point where there's so much already blow off coming out of Ethereum because the market can't wait. It's either they're gonna get their stuff together from a development standpoint, or developers are going to start building on these other chains.
Yeah, and basically you talk mostly about the developers, but what we can really see is that the users, they just don't care. They just don't care about the decentralization. They just don't care about whether it's Ethereum or something else. They just want a nice user interface, something that's quick, something that's cheap, and a lot of innovation, basically. Yeah, definitely. So okay, great. So I think now we could really, I mean, can you explain the Parachains, but in the easiest fashion? I mean, even if you oversimplify things, just the principle, because we're gonna get into the KSM token, and I think the Parachain is really a great place to start to understand how value accrues to the token and how the entire tokenomics are built, and maybe to kind of grasp how Gavin Wood is an actual engineering / tokenomics genius.
Yeah, that's a good point. So in terms of the parachains, you can think of I guess let's even just go back to Ethereum, for example. So on Ethereum, you have different dApps, and the most common ones that are used today are Aave for the lending market. You have synthetics for derivatives. And so let's just say you take synthetics and Aave, and instead of, let's say, those two dApps sharing the load within Ethereum itself, they operate completely independently. So hypothetically, if Ethereum, let's say the whatever load it had available, instead of, let's say, sharing it between these two different dApps, they just operate completely independent of each other. So the usage on synthetics does not affect the usage on Aave, and vice versa. So they have, let's say, a market that can operate within that dApp itself. And then in terms of, let's say, the value transfer, so this is where it goes more into the multi-chain aspect of it. So in Cosmos, for example, there's what's referred to as IBC that allows value to transfer from one chain to another. Or in the Polkadot and Kusama ecosystem, they use what's referred to as XCMP. All it is it just allows communication data to get sent back and forth between two different dApps that just operate totally independent of each other. Aave wouldn't care what Synthetics is doing. Synthetics wouldn't care what Aave is doing, and whatever load is happening on Synthetics does not affect whatever the cost is to do any sort of activity or smart contract interaction on Aave. So the big difference is in Ethereum, when you deploy, let's say a dApp such as Synthetics, you can freely deploy the dApp into the network, but you're having to share the resources. In the case for, let's say, Kusama, for a project to launch their own product onto, let's say, a Parachain, they have to secure and bond Kusama and lock that supply off the market for the duration of that leasing period, which typically ranges for 48 weeks on Kusama. So close to a year. So you have to lock up coins for a year that cannot get sold into the market. They are just locked. And then during that duration of time, that product or that dApp can build out their product with the intention of renewing their leasing period.
So if you compare this with maybe cloud computing, which some people might be familiar with, it's basically the difference between having dedicated capacity and shared capacity in the cloud. Right. So Ethereum would.
Sure. Yeah. Sorry. Go ahead.
Yeah. So Ethereum would be basically a shared capacity kind of cloud, and then Kusama would be, in order to use us, you absolutely have to rent this dedicated capacity slot for a certain amount of time, because this is going to make the entire network and ecosystem much faster and much better by design.
Yes, that is actually a very good way to describe it, and to let's say bring in the community into this entire ecosystem. So holders of, let's say, Kusama can support. Let's say there's a project that wants to rent. The community in Kusama can bond their tokens for teams to secure, let's say, secure the infrastructure to rent out for the course of a year. And then the incentive for them to do so is they actually get tokens back. And it varies based on the project, but they do get, there is an incentive for the community to help support and bootstrap developers into the ecosystem and help rent out or lease out, let's say, one of these Parachain slots, or in the case for cloud computing, you have your own dedicated resource instead of a shared resource.
Okay, so to make it maybe a bit easier, so basically, if we can again do a comparison, maybe we could compare this to 2017 when people needed to buy ETH to get into the ICOs. Of course, the ICOs were like mostly ideas, whereas here we have some actual projects being built. But here, if you want to be able to get the tokens early of those projects built on the Kusama ecosystem, then you need to buy some KSM, which has I think a fixed supply of 10 million coins, and then you can, instead of just switching, buying these projects built on the top of Kusama with the KSM token, you're actually lending your KSM token for the duration of the entire parachain, and in exchange, as a kind of reward, you receive some of these projects token very early on. And I believe, if I'm not mistaken, it's the only way to actually get these tokens. You can't buy them that early. The only way to get these tokens that early is to actually bond your KSM token for, I don't know, 24 weeks or 36 weeks or 48 weeks. And then in exchange, you get these tokens and can participate in kind of a new, I mean, at least in theory, it would be kind of new ICO wave, but based on more solid project. I mean, the thing is, now we have all these new ICO waves with the NFTs and everything. So the problem is really to focus on something specific, but I believe like the main idea around all of that was, how do we take all what's happened in Ethereum with ETH and the ICO, but make it a much better tokenomics, so people will not end up just dumping all their ETH, which is what happened in 2017-18, where everything crashed. And so with that, if I want to get the kind of KSM ICO tokens, then I need to bond my KSM for a certain amount of weeks, so I cannot sell them. And then the new projects who want to build on Kusama, they will always need to rent these spaces, so they will need to bond their tokens. So basically, they will not be able to just dump them.
Correct. Yeah, that was a really good breakdown. The only thing is, in terms of, let's say, the inflation, there's actually right now there's not a fixed supply on Kusama. There's a certain amount of inflation that comes in each year, but the amount of parachains or products or dApps, however you want to, I guess, call it, as far as each individual product, the amount of parachains that Kusama is looking to scale up to is about 100, and just from the first five, over 10% of the circulating supply was siphoned into the first 5 auctions. So there is going to be another round of auctions in the very near future for slots 6 to 10, and I wouldn't be surprised to see 20% of the supply siphoned out into, let's say, the first 10 parachain auctions. So it does act as a massive supply sink. And then back to what you were saying, whatever gets bonded to those auctions cannot get sold into the market for that duration of that leasing period, as you suggested.
Okay, so as a kind of recap, I mean, we talked about the parachain and what we call crowd loans, basically, where people can bond their KSM token to participate, to help this project build on the top of KSM, and in exchange get these tokens. What are the main uses of the KSM token besides that? What can I do as a KSM holder?
Sure. Yeah, that's a good question. So the main use case for the KSM token is, let's say, as we were suggesting, each person can be their own venture capitalist and invest or help lock up their coins in each of these auctions or products that are competing for a spot on the network. And then the other utility is for the overall security of the network. So Kusama uses what's referred to as shared security, meaning all the products that are launching on this network, so products, parachains, dApps, they all have uniform security across all of them for individuals that are staking their Kusama. So the use cases, I guess, to put it simply, it's 1, to secure the network, and then 2, as a means to invest in products that are looking to secure a spot on that network. And sorry, just to add one more thing, this also doesn't include any liquid staking that takes place as well, because there is going to be liquid staking that allows stakers to, let's say, access their staked capital and then leverage that into DeFi applications or dApps or parachains that are launching on the network.
Okay, so that would be a bit, if we take some examples, the same as, the same as on Aave, when you stake Aave and then you use it as a collateral, or the same as on Terra, if you deposit your UST in Anchor and then you can use your AUST as a collateral to do some other stuff with, right?
That is actually, that is a good way. That is actually a good way to think about that. Yeah, you can at that point you're introducing leverage basically through the liquid. And yeah, I think that's a good way to think about it.
Okay, so now we talked about all the different ways the KSM token can be used and how the tokenomics are pretty smart, but we've seen a crash recently in all the tokens, and the KSM actually and DOT, but let's talk just about KSM today, lagged in the recovery when we have like other tokens that just made it through a new all-time high already now. I think KSM is about 300. The all-time high is 600, so it's still down 50%. How would you explain the lag in the current market recovery? Is it because it's lagging? Is it because it was going a bit too crazy before in anticipation of the first parachains? What's happening? And again, maybe more interesting is how do you see? I mean, we don't know, but how do you see this moving forward? What are the next catalysts that would really revive the fire in the KSM token?
Yeah, that's a good question. So let's just say we're looking at Kusama to start. So Kusama was by far one of the best performing assets of basically of 2020 and even into a large part of 2021 so far. I mean, the run up on the price chart was so ridiculous throughout this year and through 2020 that it was a very steep uptrend. And this is actually something I grabbed data for. I took, let's say, the layer 1 ecosystems and the layer 0 ecosystems, and I mapped their performance from March of 2020. So that's where the bull market started. And Kusama basically destroyed almost everything when it came to the smart contracts. So they had such a huge run up in price, and then and I think a lot of that was that initial run up was no longer sustainable at the rate it was going, and it really needed time to basically cool off, reset, and try to establish some kind of market structure. Actually, I would say even the reference point Kevin has drawn on that chart is really good with the box. So it's trying to basically establish a market structure right now. And in terms of a catalyst, the next catalyst for Kusama is specifically Parachain auctions 6 through 10, as well as any ongoing development taking place on Parachains 1 through 5 that are just beginning to launch their products, because 1 through 5 are beginning to launch their products that allow users to speculate or use the network, or developers to deploy on some sort of EVM. And then for Parachain 6 through 10, that's just basically a supply sink that there's now more coins getting bonded to these Parachain auctions that can no longer get market sold. So I would say that I would expect, I would actually be I would be very surprised if Kusama wasn't beginning to, let's say, have a good spike in price, let's say for during the duration of let's say slots 6 through 10, just because of how much supply is getting locked away. And then for Polkadot, those auctions are going to take place at a later time. I would say, from my viewpoint, in my opinion, I think all eyes are on Kusama, because they are going to have, let's say, 10 parachains before even, I believe, the first 5 launch on Polkadot. So I will say that one thing a lot of this also depends on, not from a development standpoint, but specifically for price. Everything in this market that trades on exchanges is reflexive to Bitcoin. So Bitcoin has to hold above its 20-week moving average for everything. This is for everything in the market, every altcoin. As long as Bitcoin holds above its 20-week moving average, that would allow both Polkadot and Kusama to build up a really good market structure. But if Bitcoin does, let's say, break below that 20-week moving average, there's going to be a very steep retracement across every single altcoin in this market. And then the timing of that would get shifted in accordance to what Bitcoin is doing. So I think there, like, when it comes to bull markets, altcoins can rally independent of Bitcoin, but the requirement to that is Bitcoin does have to hold stable above that, or hold as support that 20-week moving average. That is a requirement for every altcoin. So in the case even for some of the coins that you mentioned that had really good rallies recently, like Terra, that was while Bitcoin was moving basically back above its 20-week moving average. So we do need to see that across the whole market for DOT and Kusama to build up a very healthy market structure.
Okay, so why would you say that the performance was so great in 2020 and 2021 for a project that basically didn't have anything concretely built for actual users? Mm-hmm. Is it a lot of speculation? Is it a lot of VC speculation? Because we know that there is a lot of projects that are a lot of money grabs from VC, where there's mega valuation, but not much to be shown or to be used by users. or is it because the tokenomics are especially good?
Mhm.
What would you say are the main causes of this huge rise in 2020 and 2021? And
Sure.
is it because the rise was huge that it's over and
Mhm.
we need to look into something else or somewhere else, or is it still something that can, you think, give decent returns based on all the activity that's happening there and the catalysts that are coming?
Sure. Yeah. So I would say, in terms of, let's say, the first part of the question, in terms of why it had a really good year in 2020, and even the Q1 and Q2 of 2021. So there was certainly a lot of speculation that went into that. I know Gavin Wood is a very well-known name in the crypto space. So there's already speculation around Gavin Wood itself. So it is true. If you look at the overall performance, it was purely speculation, because they hadn't yet launched their first 5 parachains at the time. So there was a lot of, as you mentioned, anticipation going into, let's say, those first 5 parachain auctions, and then it got overheated, and then had basically a retracement back to, I believe it briefly wicked down to like 150 on the price chart. So I would say the speculative phase is kind of done. That was the first really big move up now. And in terms of price appreciation we see now, it would have to come from basically the ongoing auctions that are siphoning supply out of the market and allowing users to invest in these products that are attempting to launch, as well as any other DeFi that takes place within that ecosystem that ultimately takes supply off the market. So you are right that that initial run up was certainly the speculative phase, and then we're now entering a different phase on the price chart that coincides with the rollout of those parachain auctions that are pulling out supply. Now, in terms of, let's say, the phase we're in now, which is the parachain auctions. The contingency on all of this, in terms of the timing as to when it can begin expanding on the price chart, is Bitcoin holding that 20-week moving average. So if we do start to see, like, hypothetically, if Bitcoin does not die in the market and drop below that 20-week moving average, there is a very good support structure that Kusama would be building up on its price chart. And one thing I like specifically about, if you look at, let's say, the dot price chart, is because if you compare, let's say, dot and Kusama, depending on where you start to analyze the chart, you can see a very similar move take place on the Kusama price chart, where they move in tandem. So dot, from my viewpoint, and this is actually, it kind of goes into like the name of like Wave3. We have not seen the biggest wave in the Polkadot ecosystem yet, in my opinion. For DOT specifically, we've only seen the first major impulse. If you even go back to the historicals on the ETH price chart, there was the first major impulse, and then a very nasty retracement going into that corrective wave. But then the wave that occurred after that was so explosive, it even exceeded that first major impulse Ethereum had during its first market cycle. So from my viewpoint, just looking at the technicals for DOTSAMA, it's really only had, at least Polkadot objectively, it's really only had its first major impulse on the price chart. And as long as Bitcoin can sustain that 20-week moving average, this could set up a very good market structure that could lead into its next impulsive wave that could actually be far larger than what we've seen during that first run up. Because as Kevin's measuring right now on the price chart, DOT rallied on that weekly chart. It was over a 10x move from its accumulation zone. And typically the second wave up is typically larger than the first moves. And again, the contingency on that, Bitcoin does have to hold that 20-week moving average to basically to build up, let's say, that support structure, because of the reflexive nature of the market. And it has entirely to do with the altcoin pairings on centralized exchanges, where you have DOT to Bitcoin and KSM to Bitcoin pairings. So if Bitcoin ends up dumping, it drags the price down because of the way that liquidity set up. So I would definitely keep that in mind. Either way, I will personally, if there is, let's say, a further blowout on that 20-week moving average, I will personally be following the DOT and Kusama price charts to set limit orders for potentially some really good buys. But if the 20-week does not break down, then we could be seeing the early stages of that support structure build up on the price chart. And a really good example is really, if you look at Ethereum's first cycle, and if you look at that first major impulse, you can start to get an idea of what some of the corrective waves could look like after you have a really big run up. Because Ethereum took over a year during its first market cycle. So Ethereum had a huge move up, and then it took about a year of consolidation, and then retracing, I believe, up to 70% before going into its next major move. And so far, Kusama and Polkadot have only been their corrective wave has only been going on for 3 to 4 months right now. So if you just look at historical patterns in the market, sometimes it can take 6 months to a year before you have these really big breakouts. I would expect you would see it sooner if Bitcoin holds that 20-week moving average. But in this case, like the very early stages on the ETH price chart, I think for some reason it ends up getting truncated on the Bitfinex chart, but on the lower left hand side of the price chart, it's part of that consolidation pattern is shown on the price chart. But there's actually even chart history that goes before that, and it took quite a while for that build up before going into its next major move. Another good chart, just purely for technicals. If you look at what Solana did, the Solana price chart it looks like it's fairly similar to Polkadot in that Solana, for one, has been trading longer in the market, but you see how big that next move was after that initial retracement. And Solana retraced for most of that, for most of those gains during that corrective wave. So if it even follows a similar pattern to Solana, you could get a very explosive move to the upside.
Yeah, it's pretty much. I mean, it's pretty much classic of how these coins trade. If you just look at DOT last year, just went on the exchange in August or September. Was a bit of a hype, and then it just kind of died for 3-4 months. Like it was pretty bad to hold these coins because you had the Bitcoin going up like crazy beside. You're like, how is that possible? And then just at some point, for pretty much no reason, it just breaks out, and then you just don't even have time to buy anything, or you just think, oh, I missed out, and then it goes up another 5x. It's just classic of all this stuff. So you just want to. I mean, that's why you want to get a narrative, an investment narrative. Know what are the catalysts coming. Know that. I mean, basically follow the project, see the improvements, how the entire thing is developing, etc. So you're pretty chill because at some point, provided the Bitcoin doesn't go back to zero or doesn't crash like 70%, at some point they're just gonna break out, and then it's gonna be too late for you to get in.
Yeah, and that's
why. And then there's gonna be people FOMOing in, and it's just gonna amplify the entire move. And the classic thing.
Absolutely, and that's why even in terms of, let's say, just the risk management aspect of it in this market, I think that's why also what a lot of what's being built around like Yield Labs is very good for the risk management aspect of it. Because the reality is, if somebody is, let's say, fully invested in Polkadot or Kusama, you're exposed to maximum volatility that the market's going to do. So you're going to see those 80% plus retracements during certain stages of market cycles. And that's just the nature when it comes to, let's say, a lot of the altcoin speculation and a lot of it, I think, because so many people have the tendency to want to go all into a specific coin in the market, which it could be fine if it works out. I'm not saying that's not the correct strategy, but psychologically, if you're doing that, you have to be able to withstand, let's say, those really violent downturns, because you are going to get them. And the only way, it's like you can start to reduce, let's say, volatility of your portfolio by having, let's say, some allocation to stable coins, which I know Yield Labs has a lot of information on, specifically around Anchor and UST and generating yield on that, which you can even reinvest into altcoins if you want to, like as free powder to invest in alts, or you can even do an allocation between like stables, Bitcoin, Ethereum, which have already proven over the course of time, like the volatility is reducing on Bitcoin and Ether. So a lot of it from my viewpoint, as far as like an investor, if you want maximum gains, you get maximum volatility. If you want the least gains, then you also get the least volatility that comes with that. And then it's basically a scale where you kind of have to pick like your position within that scale, and then set up the portfolio in accordance to what psychologically you're willing to endure.
Yeah, and probably most of the people overestimate their capabilities of being able to tolerate maximum gain, maximum volatility, because first, it's horrible, and second, they're not putting in the work to really understand what the project they invested into, and that just went down 80% is actually building, and that it doesn't change anything, and that if you just zoom out, it's probably going to be much higher in the future. But yeah, so just a couple of questions left because we're almost at the 1 hour mark and we won't be much longer. The first one is, how are such high staking yields possible on Kusama? You get 12% on Kraken, you get 15 to 20% on Bitcoin Swiss, on different places, which is pretty sweet yield on a very volatile and potentially highly appreciating assets.
Yeah, that's a good question. So in the case for, let's say, like a centralized exchange such as Kraken or Bitcoin Swiss, when it comes to, let's say, the staking rewards on them, they are operating on a fractional reserve for one. So the reason why people can even just to the whole staking rewards, the reason why people can unbond so quickly on Kraken or these other exchanges is because they are using a fractional reserve, and when that's happening, they actually don't necessarily have they likely don't have all the coins that are supposedly being unbonded. But in the case for the network itself, Kusama and DOT have been set around 12% per year. And then the APY is also going to vary based on how many people are putting coins into these parachain auctions. Because if you have, let's say, hypothetically, 25 or 30% of the supply that's going into these auctions, there's less supply that's going into, let's say, the staking pools, or it could in theory be in those staking pools. So that that inflation rate is going to change based on those kinds of parameters there. And then but in general, like the neutral point right now, the inflation is fairly high, and I do recall seeing talks as far as potentially having a referendum that can alter what that inflation rate is into the market. I just suspect right now, since it's still in the very, very early stages of rolling out these parachains, and if they want to scale it even up to 100 over time, I don't imagine that 12% being that much of an issue right now, because there's already going to be a huge supply sink. Like so even back to the inflation, since there was 11% of the supply that went into the first 5, that basically knocked out whatever inflation came into the market for that year, and then they're going to hit it again with another 5. So there's actually right now a net negative in terms of the circulating supply if you go by the auctions that are rolling out into the network. So the hard part with optimizing a lot of this stuff is you do need to have some kind of inflation coming in so people can, let's say, bond their coins to these crowd loans, and then also just have enough of an incentive to secure the network. So it becomes a very dynamic, like, supply demands relationship, which they do have a curve for, but it is a little more complex, and it is fairly similar. Like if people are familiar with how Cosmos works, there are some similarities there. It's not exactly the same, but Cosmos or Atom has a varying inflation based off how many people are staking. But in the case for Kusama and DOT, there's a huge supply sink available with those parachain auctions that even the first 5 have knocked out a year's worth of inflation in the system.
Great. Okay, now one of the probably one of the favorite moments of most of the people watching that, which is something that you guys used to love to do in Dollar Cost Crypto podcast, the moon math part. Where do you think we can get? I mean, it's completely, of course, it's completely hypothetical, and we just don't know what's going to happen. But based on these tokenomics and based on how early we're in these parachains and how much was bonded there and how much is staked also, where do you think we can get in the next 6 months, 1 year, 5 years for the KSM token? And also even like a bit like asking you, like, what are you considering doing with these tokens? Are you trying to increase your ETH stack? Are you trying to increase your USDCT, UST stack? Are you a long-term holder? Like, what are you thinking? Like, based on the potential that you see and how smart the tokenomics are.
Yeah, that's a good question. So, in terms of like, let's even, I guess we could even start with the moon math aspect of it. So, the price chart on Kusama was so ridiculous during 2020 and even parts of 2021. It's actually harder for me to project on the Kusama price chart because it's had such a big move. So I personally have to use, let's say, the Polkadot price chart to reference off of because it has a very similar fractal to Solana. It has a very similar fractal to Ethereum's first cycle. So the assumptions that I make, I'm like, okay, if this is, let's say, a fractal that's to play out again in the market, then the best reference points we have right now are Ethereum and Solana in terms of what the upside could look like. And when I mapped it over to the dot price, it did potentially put, and granted, like, not financial advice, like I don't know if it's going to hit these price targets, of course, but if you did have, let's say, a very similar size move in terms of the 3-wave, you could see dot over $500. And then one way to map it over to Kusama is the dot to Kusama ratio, which is going to be very, very volatile. Like, I believe it peaked around 17. It's currently trading around like 11 or 12. So to map it over to, let's say, the Kusama price, I just assume, okay, whatever the dot price is, multiply it by 10 for Kusama if you have a ratio around 10. And it could bounce higher because it is going to be a very, like, if you look at the KSM to dot ratio, technically that ratio is in a very steady uptrend right now. So if you just say conservatively, like even just 10 to be safe, you could see basically a $5,000 Kusama. It is really not that crazy as people think because of the amount of supply that could be going into these parachain auctions. But in terms of the timeline for that, I'm just going to say, I'm gonna be very conservative on the timeline and just say 4 to 5 years because I know a lot of people are speculating as far as like bull market and all that stuff. But the reality is, if you look at the price charts, we do not have a clear answer from a technical standpoint on the Bitcoin price chart. We've seen these fractals before. I would say that right now the speculation is the 2013 double cycle, which does look promising. But you also see that same fractal during every single Bitcoin bear market we've seen in existence. And 2013 was the one oddball. So I personally, I would be very surprised if we went into, let's say, a bear market so prematurely. But that is the downside risk I consider on the Bitcoin price chart. And to be conservative, I'm just going to put a higher timeline. And if we do see, let's say, stability on that 20-week moving average, then we get the double cycle fractal, and everything in this market is going to end up rallying to insanity. So the insanity, and from my viewpoint, is going to happen one way or another. It's just a question of the time. And in the case for Kusama and Polkadot, I personally have them as longer term investments, and at some point I will de-risk some of them into stable coins because there's a lot of knowledge and information specifically around yield labs when it comes to the stable coins that I will take advantage of because it's just an opportunity to gain passive yield on some stables. So that is the plan in mind. And to be clear, I have my long-term ETH stack that I'm not going to sell. But at the same time, I'm very skeptical of Ethereum development, and I simply cannot put all my bets into Ethereum based off some of the disruption we've already seen in the market. So I hold a basket of multiple assets. I have some stable coins. I have my Ethereum bags, and I don't have a lot of Bitcoin. I do have a little bit, but I mostly just put it into Ethereum. And then for the multi-chain aspect of it, DOT and Kusama are holdings that I have. And then in terms of, let's say, what's going on even in the Cosmos ecosystem, there's certainly very interesting things that are taking place, or developments taking place there too. So the disruption, even if you look at just past results, there's disruption taking place right now. And to me, it's like I have enough ETH to be fine, but I'm not going to only bet on ETH because their development moves at literally a snail's pace, and it's going to take time for them to roll through all these software changes. They're running a live network that was not designed for a lot of what's being built on it today. So they're going to have to go through radical changes when it comes to the scaling aspect of it. And I'm simply not going to place all my bets in that, because if my thesis is wrong and if the market keeps having these other disruptions, it could become an opportunity cost. And I think a lot of it just comes down to like the portfolio balancing. There can be comfortable positions people put in certain ecosystems without over leveraging themselves, and then going back to the whole volatility or uncertainty issues. It's all about the risk management and just keeping the options open, because once you have enough net wealth in this market, you don't have to take on these over leveraged bets. You can just put your positions in these other networks that have a lot of potential without dumping your whole ETH stack into it.
Yeah. So many things to basically recap here. One of the things basically is funny, you talked about the 5,000 kind of mark for the Kusama, because I've been in touch with a bunch of like KSM mega waves, and they all said I'm not selling before 5K, which was when there was this crazy run up to 600, but I still think like most of them they're still holding. Yeah, I mean, there were so many things you talked about that I just wanted to recap. One really interesting thing you said also that makes a lot of sense is you don't have to, even if you don't have a lot of wealth, you might want to bet into these, you might want to buy some Bitcoins or Ethereum, and then your kind of like more risky play probably should be those .KSM. They're not like the absolute like super low cap shit coins that most of them will go to zero or like dump in 90% so quickly. But these ones, they're actually lower cap, but high cap enough to be showing that something is solid and there is actual development behind it. And probably it's a bit counterintuitive because people, they want to kind of gamble and get the 100x in 2 months. But if you hold these ones and you're able to hold them through the crazy volatility, probably you're going to make like insane returns that are much better than holding shit coins that you sell at minus 90% because it's horrible and you don't even know what they're doing because they're actually doing nothing.
Yeah. Sorry, go ahead.
Yeah, and then the last thing I want to say is basically based on you were saying, I'm not really sure, like I trust Ethereum development in the future, etc. One of the key things that Gavin Wood is saying, and the reason why he started a Web3 Foundation, Polkadot, and Kusama is actually, he said, I developed the Solidity language, I developed the EVM, and we did it in 2 or 3 weeks. And I know it's a kind of proof of concept, it's not scalable. So that's why I moved on to this new ecosystem that took years to like tens and tens of developers to build, and it's still not ready. And that's what it takes to build something that's really solid. And so it's probably smart to take if you're big into ETH, take a small bet on those ones because the guy is brilliant, the team is brilliant, and there is like some actual concrete stuff being built. And I don't think they really care about this bull bear market stuff. They just build their stuff.
Yeah.
And then provided you have this long, it's always that in crypto. If you invest in something that's really solid, and most of the time you just want to bet with the founders, like that's it.
Yeah.
I mean, basically the same as if you do if you invest in startups. And so then you have a long time, you just zoom out, you have a long time frame, you say, okay, 4 to 5 years, not 6 months or 1 year. You probably get to your targets, or you probably get much higher. But the really hard stuff is to get through this crazy volatility, and the only way to get through it is to understand and research and understand what they're doing. Like, that's the only way to then just say, I don't care, like it's down 80%, but the guys are still developing basically the fundamentals. Like, it's just going up, there's more developers, there's more activity, etc. And then maybe as a kind of like wrap up before just the last point where you're going to red pill us on the Kusama ecosystem for the for the next session. As you said, at some point when you start to have a certain amount of wealth, you want to have some part in stable coins, because there is just so much stuff you can do with stable coins. Earn yield, earn free tokens that potentially do 3, 4, 5, 10x in the future. So it's a completely different mindset that you need to apply, but it's probably something that you get to when you get a certain amount of wealth to manage, and you're just not ready anymore to just see it sliced by 2 or 3 very quickly. And also you realize, there is actually a completely different way to manage that stuff that is limiting a lot my downside risk, and without how can I say that, without not having this it's just a different way to play it. You can have a great upside, but on free tokens, which is completely different, and that is actually more and more applied, because all these new protocols, they just understand that, yes, providing equity is great, but then you have these impermanent losses, which is not great. And so if you do it with the stable coin way, you don't have the impermanent losses, and you have the upside of the tokens. But that's probably something for another discussion. So maybe to just finish, as a last point, if you want to kind of red pill us, like in 1 or 2 minutes, just go through what we'll talk probably next time about, which is the Kusama ecosystem as an ecosystem with all the projects. And because we're at Yield Lab, we talk a lot about yield as a yield generation opportunity.
Sure. Yeah, absolutely. So in terms of the red pill aspect of it, so even just back first and foremost to the risk management. So if you have, let's just say hypothetically your portfolio is all in ETH, which still has a lot of volatility to it. So if you have, let's say, 80% ETH or 20% stable coins, or let's just say we focus on your ETH stack, because I know a lot of people are just all in ETH during this market cycle, which is a pretty good bet. If you hedge even 20% of your ETH stack, so you're still holding 80% of your ETH. If you're hedging 20% of it into these multi-chains, we've already seen disruption. Solana has destroyed Ethereum in performance gains. BSC has destroyed Ethereum in performance gains. So to me, it just looks like, and Terra destroyed Ethereum in performance gains. So we are seeing hits in the market. We are seeing this kind of disruption. And the way I see it, using Ethereum sucks. It just totally, completely 100% sucks. And this is coming from somebody, like, I don't have the same constraints when it comes to the gas fees, but it still sucks. Like, using Ethereum right now is so horrible that I personally am looking for opportunity within these other networks, but I'm still doing it with the intention. Like, I have, let's say, like a good ETH position I have in my retirement accounts that I'm not touching. And then for, let's say, 20 to 25% of the portfolio, I am allocating, at least within crypto, that to other potential over the next 4 to 5 years. Because I really don't want to. I'm not in the mindset of trying to like flip in and out of the market. Like, I do have my allocation to stable coins. Like, I've even mentioned that I hold basically like 30% of my portfolio is in stable coins. If I compare my retirement account and my crypto, it's about 30%. So that protects me to the downside risk. And then for my crypto holdings, I basically have my distributions. Like, I have my long-term holds in mostly Ether in my retirement account. There's a little bit of Bitcoin in there, but it's mostly ETH. And then in terms of the actual market itself, I'm more comfortable using, let's say, that allocation to stable coins, and then these other protocols that are being developed in the market, because we're seeing disruption over and over again. I would say the biggest counter right now is whether Optimism or Arbitrum can help counter that to an extent. So if somebody wants to get a little bit of everything, it's good to get a little bit of each ecosystem. But I can tell you, like, in terms of the composability aspect of it, there's a lot of good stuff happening on Polkadot and Kusama, and it's already, you know, Ethereum simply cannot handle the load in a bull market. It's to me, like, just as Ethereum has disrupted Bitcoin, because Bitcoin sucks to use too. Now there's these other chains disrupting Ethereum because Ethereum sucks so much to use. But Ethereum and Bitcoin are never going to disappear. They're still very good stores of value. They're still very good ones to hold long term, because you shouldn't be, you know, using or leveraging most of your coins. Like, most of the coins should just be stationary, and then for the yield opportunities, you can access the stable coins and access all sorts of tools. And there's going to be a lot of yields right now for Polkadot and Kusama. It's a little bit intermediate to advanced, because it's more based on yield farming right now with these coins that are getting bootstrapped. But I would say, because the network is just it's just in its early stages, paying attention to it now is going to give you're going to be able to front run the rest of the market when you start to see these yield opportunities. Like, even the yield farming, those that did it correctly on Karura are up a lot of money. So that's stuff that I'm personally looking for. Like, I think we're going to see a big game in these layer 0 chains like Polkadot, Kusama. I believe in Cosmos as well, even though we're not talking about it specifically on this stream. And they're helping scale Ethereum. They're not trying to kill it. And to me, there's already a substantial amount of supply locked in those 5 parachains. The network scales up to 100. That's a lot of supply that can be taken off the market. That is just really good for price pumping.
Awesome. Thank you so much, Patrick, the king of DOTSAMA. We look forward for the next sessions. There's going to be so much more to come. I mean, it's just been like a very high-level view, but I think it was more than enough for the first session. It was awesome. Thank you so much. And yeah, I mean, there's going to be a bunch of other sessions on the Polkadot, the ecosystem, Kusama ecosystem, Polkadot ecosystem, and looking forward to dig deeper into this.
Yeah, absolutely. And and thanks for having me. It was a really good. I did enjoy this stream a lot. So I do like talking about DOTSAMA. So yeah, thanks for having me on.
What are the other things that you love to talk about?
Sure. Yeah. So as far as I would say, really my main focus, and at least within crypto, is just the multi-chain side of it. So DOTSAMA is I would say the primary, and then a secondary is basically what's going on within the Cosmos network. Though, just to be very clear, the actual development around projects that are building in Cosmos, there's already great coverage within Yield Labs. So that's where I learn actually a lot of the work that's taking place, let's say on Terra or these other chains that are building using Tendermint. But in terms of Cosmos, the main one I'm analyzing there is derivatives. And then the Atom token itself, whether the developers, because the community in Cosmos is decentralized. It is very decentralized. So there's already discussion as far as adding these burns to the Atom token, because it does need better tokenomics. But there's already some early ideas in place, specifically with Gravity DEX, as to the fee burning. And that's something I'm paying very close attention to, because if the tokenomics around Atom get solidified, there's a lot of good things you could see in terms of like an asset. Because right now the products that are building on Cosmos have more value than Atom itself. But these decentralized networks have the ability to upgrade the protocol, make changes that can make substantial changes to how the tokens operate. And they do have a really good community. I do consider Cosmos a very, very very good network in terms of just opportunity. I mean, we even see it with what happened with Terra. So I would say mostly just focused on the tokenomics aspect of Cosmos, and then just keeping along with a lot of the work that Yield Labs is doing within the Cosmos ecosystem, and just reading all the articles to stay at least somewhat on parity there.
Yeah, we have a ton of content coming up for everyone, and it's like hard to touch on everything. And I've really enjoyed this session, just kind of like watching you guys go. And so yeah, we're very, like, for anyone who's not kind of come across before, we're very open and inclusive. It's not kind of me and Kevin just sitting here taking all the limelight. We want it to be like an organic platform where just other people can come on, and Patrick's definitely a part of that. So you touched on so much stuff in that hour. So yeah, there's so much about the risk management, and I think every time we talk, Patrick, like one-to-one, we always talk about risk management a lot. And I really respect your perspective and your kind of just the way you see things. So yeah, we're going to be doing a lot more of that. We're going to be doing a lot more on kind of what Kevin touched on, the using stable to create risk on positions. I really don't think anybody's talking about this kind of stuff, and we're going to see. I personally believe this is a strategy I've been using for a while. It's going to be a longer term strategy, but I think it's going to pay big down the road, because a lot of these tokens kind of have a lot of promise, and we're basically getting in at the ground on everything. So like, let's see how we go with that. And yeah, where can people find you? We did some content about 2 weeks ago. I was going to list it this week, and then we did this session as well. So I thought, let's not do a double Patrick week. We're going to put that one out next week, just to space the content a little bit. But where, and people, that was on your channel, so people welcome to watch that. Where can they find you and learn a bit more about your work?
Yeah, absolutely. So everybody could find me on Twitter at Wave3TV, as well as YouTube. There's streams, I would say, about every 1 to 2 weeks on YouTube. Same tag, Wave3TV. And then I'm also anybody could shoot me a message on Telegram. I do have Telegram. I'm also within the Yield Labs community, so you could even message me in there, because there's already a lot of collaboration that's taking place in there. So yeah, basically Twitter, YouTube, Telegram, and then even just within this community, Yield Labs, you can shoot me a DM within the Yield Labs channel.
Sure, yeah. So more Terra stuff, more Dot and Kusama stuff, more yield stuff, more strategy, more portfolio management, more everything, right? No financial advice on none of it, but we're going to be doing a lot, and a lot of collaboration with the older people that we worked with back in the day. So you're definitely one of them, Charlie, Miguel, everybody, right? So I'm really looking forward to it. Thank you, Kevin. I'll let you have the final word before we close the show, because you did such a great job.
Yeah, we just look forward so much to continuing that. It's so much fun. We're learning a lot every day, just talking with people, and also just by spending so much time trying to explain ourselves. You know, like you can only explain things when you really understand them well, and the more you try to explain them in an easier fashion, the more it kind of pushes you to understand things better. And so I think it's a great exercise for everyone, and everybody is just improving all the time. We're still so early in this stuff. It's really, because I was thinking yesterday, like, I really got into this crypto stuff late 18, and I was feeling it was late already. And now I'm just realizing how early it was compared to now. And I still think it's so early. There is so many opportunities. And yeah, it's just about making this first step, and then actually putting in the work to really understand. A lot of people coming to me, hey, what should I buy? Blah, blah, blah. Like, this is not how you do that stuff. Like, you either develop a passion for it, and you just research, and it becomes a second nature and a hobby, that if it's a hobby now, it's going to become your main job, like, sooner or later, that's for sure. Yeah, or you just don't care and you just don't do that stuff. But yeah, it's cool to have some like-minded people, and to try to build this community, and I'm sure it can only go up from here in terms of knowledge, community, portfolio size, everything, basically. So it's awesome.
Yeah, up only. So yeah, lots to do, and if we can do it, I definitely everybody else can do it as well. So we'll leave it there. Let's do a follow-up session, and we'll put the other video from Patrick out in a couple of days as well. So there's a replay if anyone wants to watch this as well. So again, just to consume the information twice, it's sometimes good. So thank you very much, guys. I really enjoyed listening, and it was really fun having you. I'll speak to you soon.